All right. So talking about exits, I think the hang up that people have is I don't know if I'm getting out too early. I don't know if I'm getting out too late. Right. And so we're going to talk about some of those signs that we need to look for. Right. And then we'll go to the charts and talk about those. I think this is an important topic that we want to make sure everybody so we can have this subject, have this discussion so we can reduce the anxiety about, all right, is this where I need to get off? Right. And we'll talk about that. One of there's a few things we want to look at on how can I recognize exits. Number one is price at structure. And I'm going to stop right here. Hey, Kim, can you do me a favor and read those rules for me real quick so people have an understanding about, about turnarounds and stuff like that.
So far as a change of direction,
Yeah.
a change of direction is not complete until it breaks an area or a line of significance. Yesterday's high, yesterday's low, the 50, significant points of support and resistance.
So when we talk about, is price at structure, I think good things happen at structure if you using the rules. Also, train wrecks happen at structure because I've seen people get out with profit at structure, and because price may be looking like it's going to break through, they get in too early and price goes the other way, then they get out, then price goes back up to structure, and then they get hit over the head again because they don't know when to enter. So is prices structured? Two, does exhaustion exist? And we'll talk about that when we go to the chart. Three, has volume increased or decreased? Now, this is very important because either if price is at an upward or downward movement, is volume increasing to take us through that level of structure to continue with the current trend? Four, is time a factor? If you're in a trade and you're nearing structure and the new day is coming, then I've seen where I've been in a trade at the new day coming, and then when it comes, everybody dumps those wholesale orders, and then price does this crazy reversal. So sometimes, we may have to exit before the new day just to secure profit. Is time a factor? Again, this is what I just said about the new day. Am I in a trade? Am I profitable at this point? Or am I not profitable, but I could go ahead and manage this small loss because I don't know what direction price is going to go in at the new day. Does everybody understand that? So let's say I'm negative 8 pips and I'm in a trade and I'm at the new day and the new day is about to happen. I might just want to go ahead and eat the 8 pips if if price is consolidating or I'm not sure in which direction it may continue to go in. If I'm in a current trend on the upward or downward movement, I don't know what price may do. So I might just go ahead and keep my loss at a minimum. And then if price is going to continue in that upward movement, I may find me an entry and continue with that trend. Do the ADX and the GG trend line agree? If the ADX and the GG trend line are not agreeing, and people watching this on YouTube, you may not have a GG trend line indicator. But if these two things agree, then chances are that price may continue. Chances are that price may continue. But the caveat in that is there volume in the current trading period. And then finally, check the lower time frames for trend reversals. So if I'm at structure in an upward movement, and then I go to the lower time frame, in this case, we use the 15 or the 30-minute, and I see two bearish candles and prices going the other way, then it may be time for me to at least put in my trailing stop at that point. Everybody understand that? Y'all with me on that?
Yes.
Okay.
Yes.
Yes, sir. All right. So here's a perfect example. Again, we're looking at NZDJPY. The first thing I'm going to do can you guys see my screen?
Yes.
Okay. So the first thing I'm going to do, I want to put in I want to put in a trend line. I want to put in a trend line because of the fact that I want help. I want help trying to figure out where volume is. Okay. So I want to pick a solid line of structure that gives me enough data to help me out. So I see this group of wicks here at the same rejection period. That's a pretty good level of structure for me. So then here's the trend beginning on the upper movement. I take my trend line, put it here, and then just a natural move upward right here, right? And then I click on this line so these dots can disappear and lock in that line. Okay. Then I get, because the trend, there was a break of structure here, and then the trend continued. Then I want to do another trend line so I can read what current volume is. Okay. And those of you not familiar with this structure, the further away price is from the trend line, the more volume here. Space equals volume. So the more space here, this may continue. So now prices, we have a break of structure, then we have a continuation here. Remember, these flat bottom candles act as a beginning of a trend or continuation. This is a continuation of this upper movement here. Everybody with me? So now, as we talked about in the opening, here is price at structure and a significant level of structure because we're talking about yesterday's high. So I want to move this chart down because I want to see where a possible entry is going to be, especially if I am not in the trade at this moment. Okay, so price has some things to overcome. So here's current price. So we do our order of operation. Write this down if you don't have it written down. And our order of operation, number one, locate price. So here's price here. Number two, identify support, resistance, and structure. So here is my trading zone here to here. I'm in an area of resistance. Here's support here. Price is trapped in between structure, and I'm waiting for a breakout. Now, we looked at this pair the other night, and we saw that we had we're going to go ahead and trap price because price is stuck in between structure. So that's what we did. Now, if you guys don't have this, this is NZDJPY. This is a sell peak here. Actually, I think this was a signal, 92.233. And for the buy peak, this is 95.073. So let's go back to current price. So here is price in this area of resistance and just below yesterday's high. I don't need to look at any other thing. I don't need to look at indicators. I don't need to go to the lower time frame because of the fact there's structure on this candle. So in order for me or for price to break through a significant level of structure, it needs volume. It needs some power. There is no power here. No money here. Amen. No money here. The RSI here is at 58.6. So, but what's king? Price is king all day, every day. And right now, price is saying that there is no money here. There is no money here. So at this point, I could do one or two things. I am waiting for price to hit this alert up here, or I'm waiting for price to reject and to hit this alert here. There's no need to even talk about trying to get in before here. Now, some educators will put you in here, but we've already determined from a previous class that there's structure in here. But Richard, this show does look appetizing though, doesn't it? If you don't know any better, you're going like, well, Derek's crazy. He doesn't know what he's talking about. I'm getting in here. Well, this flat bottom candle is, and the bottom of this demand box is a significant area of structure. This dude right here, where there's some moderate money here, but there's price rejection here. So I'm going to put a horizontal line here because right here, this is an area that structure is not tangible. But when you put this horizontal line there, it all of a sudden becomes tangible. Now, all of a sudden, the lack of space here is apparent because of structure. And that's why we didn't get in here and we get in here. Well, Derek, can I ask you a question? Sure. Well, if you have price plotted here and you believe that price is coming here, then why don't I just get in here? Maybe I could use a lower time frame. I said you can. You sure you can. Number one, because it's your money. But number two, We have a thing here where we call a personal grade of probability of success. Is the probability of success entering trade here or entering a trade here for the downward move? See how we do that? Is my grade of success greater here or greater here or here? I don't have any structure here. And not only that, this is called a golden cross. It is a significant event in price action. I have to plot that as well. Price reject there? Well, it did here. I'm waiting for price to hit this or clear it. And then I could go on my business on this downward movement. Y'all feel me on that?
Yes.
Yes.
Somebody have a pair with an example where price is at structure that you want me to take a look at? No? All right. So let me look for one. Here's let's look at GBP USD. JPY.
So
Go ahead.
on that prior example, was that NZD-JPY?
Yes.
Where I saw where the where we had our signal at, but where would we exit at?
This is a signal itself.
Right.
Didn't we make this a signal?
Yeah, you gave us you gave us you did.
Okay,
gave us
so
the-
wherever the TP is on that signal, that's your exit. Let's see. All right, this is interesting. This is kind of tricky. So let's look at this one. So this is USD CAD. Somebody tell me, why is this tricky? Come on. Somebody tell me, why is it tricky?
Are you looking for just one reason, or?
Well, I mean, what's
Still,
the reason for you?
Narrow trading zone and no money.
So let me and thank you for always participating, but it was a bear trap. And I'm gonna tell you why it was a bear trap. Yes, we have the zone within a zone, right? But there's no overall trading zone here. See what I mean? There's no supply boxes, no demand
Okay.
boxes.
Yes, you're right. Absolutely right.
So that's why it's tricky. So, well, Derek, how can we make these intangible spaces tangible? Well, that's a good question. I'm gonna answer it for you. So here's the highest point here. Everybody see this? This is the highest point of price. I'm going to put a horizontal line right here. And here's the lowest point of price, and I'm going to put that right here. Now, I want everybody to notice something. Everybody who watches, who watches this, here in class and on YouTube, I want you guys to notice something. Anybody who tells you wicks don't matter in price action, you tell them that Derek Taylor said you're full of shit. Because the market marked yesterday's low with this. Y'all see that? Also marked yesterday's high with this wick. Y'all feel me?
Yes.
So
Yes.
wicks matter. Wicks matter. So I've heard many people say, the candles lie to you. Actually, they don't. What lies to you is the line chart, because the line chart helps you with identifying certain levels of structure with these rejection points, right? And well, Derek, what's this have to do with exits? Well, these rejection points help us with structure. Structure helps us with entries and exits. Okay. But it does not tell us where price was during the period. So let's put the candles back on. If we go back to NZD JP. Hang on one second. Just hold that thought. I forgot what I was going to say. Go ahead.
I'm sorry. What's the rationale behind with no demand box or supply?
Well, this philosophy, the philosophy of having an overall trading zone is to have structure. So when you don't have structure, Dr. Spiller used to tell us, if there's no structure, you probably want to pass. And there also was that GBP USD? No, that was USD CAD. So when you look at this, there isn't a lot of money here. This is not the pair I was looking at. Not the pair I was looking at. I can't remember. Anyway, when you have a pair that doesn't have supply boxes or demand boxes, there's no structure, to remember, price trades from zone to zone to structure to structure. If there's no overall trading zone, then it's very hard to gauge. And then also, Richard, there's a thing about, trying to measure value. Is this a risk? And, we know that if we have, like here, we have a demand box here, we have a supply box here, we know if we're using the the fib that we go from the lowest point to the highest point, and we know that because this is the highest point, then past this supply box is an area of continuation, right? But we don't know where that is if there's no supply boxes or demand boxes. You feel me on that?
Yes, makes sense.
So think about this. Let's say there's a huge geopolitical event, somebody sets a bomb or something in the strait, and the market just goes crazy. Once price breaks out of that zone and price is like going nuts, and there's no chance for, because price is moving so fast, there's no chance for a supply box or demand box at that point. Now you have to, put in trailing stops at that point, right? Because I don't have a gauge. Where does my risk, where does it measure greater than? So we know that if price is overperforming, we know that the possibility of price rejecting is higher, right? When price is trading outside the zone. But if there is no zone, then the whole trade movement, whether it's in an upper movement or downward movement, is a total larger risk than normal. So that's why I would not ever, I wouldn't say ever, but chances are if I don't see a trading zone, I'm probably not taking the trade. Or I may wait for rejection or a influx of volume at that point. You feel me on that?
Yes, sir.
Let's look at Euro NZD. Again, just trying to get a good example of an exit. This is a great example here. So here's price coming into the zone between yesterday's high and yesterday's low. It comes out here, right? So I could put a trend line because I have some rejection here. So I can put a trend line here. So I have this downward movement. Well, there's a couple of ways I could do this. So I have these two periods here that rejected here in the same area, right? I could put a horizontal line here. And I can say, hey, if price crosses here, I'm going to go ahead and put my trailing stop in at that point. Or I could wait for the break of structure. But even then, I want to get another confirmation. So I want price to break another line of structure where at this point would probably be the D1 support line here. Everybody good? And if you don't understand, hey, this is a great time to say, hey, I don't understand that, because we want everybody to be comfortable here, figuring out, hey, is this the point where it's time for me to go ahead and take my profit? Or at
Okay,
least go ahead.
sorry.
Go
I
ahead.
was saying, okay, when you said you were going to put your trailer stop there, are you going to be in a trade when you put your trailer stop
Yeah,
there?
absolutely. Yeah. Not,
And
but this scenario is I am still in the downward movement here,
okay, okay,
right? So
sir.
if price gets here and gets the structure, this is a bullish candle at this point. If this is going to be a bullish candle that's going to break a certain level of structure, in this case here, I can either put my trailing stop in as price breaks here, or I could put my trailing stop in as price breaks the break of structure. But frankly, everybody, I believe that if you're putting a trailing stop here at the break of structure, I think that's a little bit too late, right? I think it's just a little bit too late. But some people may not put their trailing stop in until the 5 crosses the 13. I also think that's late as well because, the moving averages are operating on a delay anyway. Everybody understand what I'm saying?
Yes.
Yes.
Okay. All right. So nobody has a pair to look at? Anybody
You look
work?
at GB.
Yeah. All right. The first thing I see is price is consolidating here. First thing I see. So I'm going to put a horizontal line here. Now, how do you want me to work this? Are you in this are you in this trade right now?
Yeah, I'm still in the sale.
You're still in sell. Okay.
Mhm.
Groovy. So Kim, this is what I would do if I were you. First of all, before I draw this horizontal line, I would take my crosshairs to see if this line is going to match here and here, right? So I want to put this horizontal line and look at that, right? So these
Right.
two areas touch that. So I'm going to make that my significant line of structure. So if you're looking at this, if you're in a cell and I have this dude here, so tomorrow we're going to do the SWOT analysis, strength, weaknesses, opportunities, and threats. But for you, what do you think the threat is for you at this point? What endangers your trade not continuing in a sell?
We got that demand box there.
There it is. That's it, baby. Because this demand box is promoting this upper movement here,
Yes.
right?
Right.
So, and the other thing that's in your favor, what's your strength?
Well, I've got more supply than I do demand.
I like that. I like how you're thinking. But there's another thing. There's another thing too.
Somebody said something.
Somebody said the GG trend line. And yes, they're thinking the same thing I'm thinking. Because these two, this GG trend line, hold on, get my illustrator here. This GG trend line and the ADX are agreeing, meaning that this trade is not trending. So this trade is not trending, meaning that there's not a lot of momentum for the upper movement here at the moment, right? And look at current price and the 50. There's still a lot of space here in this downward movement.
Right.
So for me, if price goes past this significant level of structure, I don't know if I'd get out of the trade, but I damn sure would put in my trailing stop at that point.
Okay.
It looks like you may be heading to toward death cross.
Yeah. The 50 over the 200. But money would have to continue in this downward movement. So the other thing I would do, I would look at the momentum, and here is your issue. I have structure here on the momentum itself. And this is where you want to say, okay, if this momentum doesn't cross here, I'm not tripping. You understand what I'm saying, Kim? If the momentum does not cross this line of structure, I'm not tripping at all.
Right.
And even if it does, you go to past price or past movement here, price rejected here at the 100. 1, 2, 3, 4, 5. 5 times. So, and plus, I have an M here. This is stochastic going to continue and go past 20 and start consolidating before it rejects and goes to the upper movement. But if you look at this group of candles, nothing here is telling me to get out of this trade. So this is the point where, in exits, right? Is there anything on this chart at this particular moment telling me to get out of the trade? No. But a lot of people nut up in this area because they go, oh my God, oh. Now see, you might have got in here and you got 157 pips made, and then price comes back up here and takes 43 of them, and then you turn around and then price comes back and gives back 28, 31 of them back, and then now you got this little dude here, who's taking 8 of the 31 you've made. You're still in good profit. But because you guys saw this upper movement here, and now you tripping, I'm getting out. But nothing here says get out. Nothing. But this is why I say in order to be a better trader, you have to trade. Because if you have enough trades, this should not scare you. Y'all feel me?
Yes.
Any questions?
It shouldn't scare you, but from a peace of mind standpoint, if you got 100 plus pips and you decide to execute, as long as you're comfortable with it, I mean, that's not a bad move either.
No. You're absolutely right. Hey, if you decide I want to go ahead and take the bag, then take the bag. I want everybody to understand I am not promoting doing a market execution, getting out of the trade. I'm not, I said that wrong. I am not poo-pooing on the idea that, hey, if I want to take my 120 some pips and go about my business because this looks like soup, then I'm out. I dig it.
You just said it. Market execution.
Market execution happens right then, right now.
Okay.
Okay. And a trailing stop follows price, right? So put it this way, a market execution is immediate. And all you're doing is going and then, pressing exit on the trade on your phone or on the computer, and it's done. It's over. I'm not waiting for nothing. I'm not waiting for a trailing stop. I'm not waiting for a stop loss. A market execution is immediate.
Okay. Thanks.
You're welcome. So, Kim Cunningham, do you have a better understanding about exits at this point?
Yes.
Good. All right, y'all. I wanted to go over that because I just think it's real important. But in order to get better at this, you have to take more trades. You just do. I'm not saying you have to spend a lot of money. I'm just saying you have to take more trades. David, you got something?
Yes, sir. Could we look at Euro USD?
Okay, so I locate price, but other than price, what's the first thing you notice? Anybody?
Consolidation in the demand box.
Yes, ma'am. Very good, Tammy. Very good. So I see straight lines here. Straight line on the 50. I see straight line here on the 200. So if I have a straight line equals consolidation equals a straight line equals a change in direction. So if I have straight lines on the 50 and the 200, I'm probably going to have some sort of change in direction at this point. So remember what Kim said, the change in direction here when price crosses a significant line of structure. The 50 is very significant, right? So here's price here, broke this, and then now have a consolidation. I'm assuming, and I don't know this to be true, but I'm assuming that the demand box came after this break here. So now price, I have not really tweezers, but I have a series of dojis here, which means that maybe this is signaling that this downward movement is over. But do I have enough information here? No, I don't have enough information here. This candle's only an hour old. And it could be, unless a significant level of volume is entered into this pair, this could consolidate to that 12 o'clock candle. So I need some more information. So I established that I have a healthy trading zone, right? I know where support, resistance, and structure is. The thing I need to see is there increase in volume? And I can go right here to the momentum. And the momentum is flat, telling me that, hey man, right now there's no money here. But if I'm looking for a movement, the stochastic here is in the sweet spot and price is turning up. So is this a prelude to an upper movement? Well, I'm looking at the RSI, and the RSI is telling me that maybe this momentum, there might be some power in the upper movement, but the momentum at the moment is saying no. And here's where that patience thing comes in. Can I wait for price to get into my zone, right? So let's go back here. We're using the EMAs because I kind of want to see what the 50 and the 200 are doing. But there's one significant level of structure that has caught my eye. What do you guys think it is? Come on, if you know what it is, somebody tell me. So here's the thing that caught my eye. These two flat top candles here. One right here and one right here. So if price does turn up, right? If price does turn up, it has to break here and here. And if it does, my entry is not going to be really, that's a lot of supply, man. Look at that. That's a lot of supply.
Would you also probably would have diversions with the NACD?
Yes, at the moment, if price continues in the upper movement here, I have diversions here. So, we don't have a trade at the moment. And you have diversions on the momentum chart too. So we definitely don't have a trade. But with all this supply, Kim, I'm probably waiting for rejection.
Yes.
And if I'm
Euro USD moves so slow.
and it moves so slow, I mean, this thing could be here till Friday. It really could. So what I want to do is at this point is I want to go ahead and prepare for the downward movement. So let me tell y'all what I see. This could be an entry right here. So let's see here. Let me get the fib. I'm going to go ahead and do a horizontal line right here so I can set the fib here when I pull it down. And grab the fib here and bring this down. Boy. So this 200 EMA is a significant line of structure, right? Normally, I would just X this out, but I'm going to go ahead and give a sell peak here. Derek, why are you doing that? Because it may take forever for price to get down here, because this is the slowest moving pair in Forex. The 200 may not even be here when price arrives. Y'all understand? And here's the other thing. Let's say the 200 stays here. What's going to follow this candle, or what's going to follow price as it moves down?
The 50.
Oh, yes, ma'am. If that 50 falls, if that 50 comes here, right, and price continues and it falls and we get a death cross here, then we know we're good for at least 45 to 50 pips at that moment. We know this just by experience. So in this case, I welcome the 50. And I hope the 200 stays right there because this has a potential here. This has a potential of 80 pips. Potential. Well, let's just go ahead and we're just going to do a sell peak here. So Euro USD EP for a sell peak is 1.16740. 1.16740. You see that, Richard? Sometimes things just fall the way you need them to fall. So, but
If by chance, and just hypothetical, if that price when you get in, if it's above that 200, do you do a half a lot size or
oh yeah, we're still doing half. I'm still, it depends on where yesterday's low is going to be.
Right.
This zone, because Euro USD moves so slow, this zone could move. So
Yeah.
yesterday's low could be here at that point. It just, just all depends. But if I get in here and this doesn't move, what do they say? The game is a matter of inches. I'm probably taking a full boat there, Richard. And this is one of those things where I probably wouldn't take, I think I would take a full boat here and just, ride that one. This is where some people will just take that one. But let's just say your account warrants a full, 10 pips. 10 times 75, that's $750. So I always like these price, these definite movements of price, classes like entries and exits. Well, in this case, we're just concentrating on exits. I think if there's been an error in judgment, I don't think I've talked about exits enough by itself. We've talked about entries plenty of times, but I think a lot of anxiety is a very heavy weight when it comes to exits, right? Especially, people trying to secure the money that they've had. So we'll talk about that some more next week. Y'all, we are heading into the last part of April. I don't know what day this is in our savings account, but we want to make sure, y'all, that we are moving toward getting free. In order to get free, you need 20 pips a day in your savings account. 20 pips a day. 20 pips a day. I mean, the hardest thing about the savings account is doing the same boring shit every day. That's why people want to move to indices a lot because of the fact that, there's more excitement there in indices. And that's true. There is. I would not lie. I have a very fond relationships with indices. But as a steady Betty in your savings account, you're not trading indices. You're not trading crypto. You're not trading gold or oil or anything aggressive. We're just doing the standard regular Forex pairs. 20 pips a day. You do that enough for 240 days, you will be free. Okay? So let's just get consistent and move forward in that. All right, y'all. Good class tonight. I appreciate y'all very much. Y'all have a good night.